Hello, everyone. I am chatting with Yazan. Some of you like when I have him on. And today we have a very interesting conversation because we had this conversation many times about why Yazan likes microcap stocks. And I think it would be good for you to just kind of hear his thoughts because I think they make a lot of sense. So thanks, Yazan, for doing this.
Thank you for having me. So, first of all, let's take a step back and, I know that a lot of your viewers, as well as including myself, I mean, I've been investing in microcaps for since 2007. And I can tell you that what we've seen in the last 18 or so months resembles pretty much what I've seen in 2008 and 9, in this space where, liquidity is very dry, um, and people start throwing the towel. Everyone says, this is not for me, and they leave. This is not the first time I've seen this rodeo before. And then there, comes another boom, a new set of people come in, and, so on and so forth. But I can tell you that when the market turns in the microcap space, there's, in my opinion, it's very difficult to replicate the returns that you can get in microcaps relative to the small or mid caps or even large cap or definitely large caps on Nasdaq. And one of the things that I think we spoke about yesterday was an example of, where a lot of people trade, um, Nasdaq stocks, and I have nothing against that. In fact, I actually trade Nasdaq stocks, and I trade Canadian microcaps and US microcaps because sometimes there's an alpha that you can make. The one thing though is that when, let's say I see that the chart is about to break up because of volume or whatever on a mid cap, small cap, how much are you going to go and invest? That's always the question, right? And the reality is that no matter what's your net worth, the amount of money that you put in, unless you're amongst the 1%, I really think it's only 1% that are truly good traders. And you know, unless you're amongst that 1% that actually know when to buy and when to sell with zero emotion. Because it's one thing to know technical analysis, it's another thing to implement it. So if you're not in the 1 percentile and you have a full-time job or you do something else or you can't manage your emotions, the reality is that what you're willing to risk in those types of trades is not going to really make a dent to your financial being. You're not going to become further, it might pay some bills, which is great, but it's not going to be enough for you to, further your life, put a down payment on a house, buy a car, um, take a nice vacation, or something else, and that's where the alpha is. And you said something before which resum really stuck with me, and I agree fully with it, is that the competition in this landscape of microcaps is very, you're not competing with hedge funds, you're not competing with bigger money, you're not competing with, real significant competition. So, and the reason is what we have spoken about a lot of times is a lot of times, even if a company is liked by an institution, they are not able to buy it in. You know, um, we spoke about Aduro several times, and we said like, you know, Every institution or every fund manager that has met Aduro, they always say, "We'd love to be part of it." Some have already taken positions, small, but the reality is that they cannot really buy significant position because the market cap is so small. And I think the same applies to Berkshire and the rest. So this allows you as an investor a significant alpha when things turn around. And things will turn around. Like I have no doubt that liquidity is going to come. It just, what we said last time, like alpha has to be made somewhere. And right now, what happened is alpha was made into large caps. It moved to mid caps. It's moved into mid caps. Now it's starting to move into US small caps. And then it's going to come to micro caps. I mean, like, when is the question? It's not if. So that creates, like, for people that have capital right now, it creates a significant alpha, but it can't be like, in order to have that alpha, you got to be very careful, or you have to have the conviction in what you're buying. So in other words, you have to have vet the investment for a period of time. You know, like for me to like Aduro, or for me to like Berkshire, or for yourself as well, or any of your members, it's not the same the first month. The first time that you introduced any of these companies, you might have had a bit of like a follow, okay? And some people might have put some money in finance, but that conviction increases over time or decreases if the company's execution is meeting or is not. So, and I think that's why, those positions that you have where, the conviction gets built up throughout time. Uh, Again, Berkshire, Oracle, Aduro, you get to a point. You get to a point where you're gonna be able to hold this throughout those drawdowns that you mentioned during, one of your recent videos. So I think
How would
this
you
is
how
what.
would you compare this to? We talked about Carvana. Why Carvana did well? We talked about it, but why wouldn't you have as much conviction in something like Carvana versus other things like Voxter or Duro?
Well, let's take a step back. If I till today, and you're talking to someone that actually made some money on the way up with Carvana. Some, when I say some, because that's the reality. Um, I Nothing has changed in Carvana. Carvana was a short squeeze, a perfect short squeeze from a bottom, following a tax loss season. And I don't see anything fundamentally that has changed from $3 to where close to, I don't know, 50 some dollars. Uh, I didn't read the earnings today. Apparently, the earnings were good, but I don't think something major fundamentally has changed. They have $8 billion of outstanding debt. The margin, their margin for their card dispensary business is very low. Um, and and that doesn't give you enough conviction, or at least for me, it doesn't give me enough conviction to. All right, sorry about that. So that doesn't give you enough conviction to buy something significant, or again, life changing into a Gravatta. And I believe a lot of people might throw a few $1,000s, or might have done that. And I bet you that most people did not buy it at 3 and sell it at 50. It's the one of the best performing stocks. 1,700% from bottom to where it is right now. But I guarantee you that even if someone put 3 grand into Carvana at $4, I doubt that they're still holding it. Absolutely, I doubt. So, and that's because one, again, fundamentals haven't changed. Two, you know, like for the average person, do you really have access to the CEO? Like, can you speak with the CEO of Carvana and meet them and check? No. The reality is no, unless you're, an activist that have a hedge fund with 100 million bucks or something. No one's gonna listen to you to say, yeah, I'll take your call. Whereas you and I know that Ofer, Gary, you say you're like any shareholder. It's not just me, you. Any shareholder drops them an email or text within a week, they're gonna speak with you. They're gonna ask them. They're gonna say, "I don't like this. Explain that." They're gonna pick it up. So we do have something very unique in microcaps, and when they go parabolic. You can really make 5, 10x your money. And if you can hold through the conviction through time, that's really a meaningful score. Even if it was 10 grand, 10 grand, can turning into 50, 100 grand. That's meaningful score. So that's why I think microcaps have such a love-hate relationship with investors, because when they're loved, they're chased, and when they're hated, they're like what's happening nowadays. Everyone doesn't want to touch them, no matter what the share price is. No, 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 there's no liquidity. We're going to, you know, it's not going to work. It's not coming. The interest rates are high, blah, blah, blah. And you're like, okay, well, yeah, but if I look at the other side of the pond, I'm seeing, mid caps and small caps on NASDAQ seeing a bid, and, going up 100%, 200%, whatever, uh, because of all the short squeezes. So you're going to convince me that people are not going to look at the alpha that they can make on these microcaps, and they're going to just ignore it. They're going to say, no, no, we don't want it. So it's going to come. The question is when, right? That's really it. Um, so I hope that that answers your question.
Yeah, no, that's good. Now we were talking about, you sent me a text the other day that I am not being appreciated right now.
Yep,
And I want you to talk about this.
sure.
What did you mean by this?
Well, I mean, I look at what you're providing in MCE as a service, and I don't think people really understand what what you're providing, because being able to get access to someone that, here's the reality, okay? I bet you that 9 out of 10 of your members, or even people on your YouTube channel, they don't have the time to do the vetting themselves. They can't vet these companies. Okay, even if they claim that they can, that the reality is they can't. They need to have the time, the but you do the legwork for them. You go and you actually instigate, go and check, and if someone's not being truthful or whatever, you don't take it on. You're not gonna you call them out, and you know so I think that's a big advantage that people take for granted that you're offering them something that, um, realistically speaking, they just don't appreciate. And what they wind up doing is, because they don't appreciate it, they wind up, not taking advantage of it. So, you're not. There are so many good companies there, and like we keep talking about, um, three, because those are the ones that you speak on them publicly. So I don't want to, talk about some of the others, but some of the others that you have there are great value companies. So someone like you're doing the work for the average person. You're getting them sweet deals. And what I mean by that is, if I'm someone with a full-time job and I really don't have time to, you know, do the research, do my homework, but I get the chance to, speak with management. I got a chance to, um, see them once. I get a chance to review all your videos. You've kind of cut my homework time by not hours, by days, months. And you're again, no matter what people say about compensation, not compensation, you're putting your money where your mouth is. You're investing in these companies, like you said in Boxer, like you did in Aduro, Oracle. So it's not like, okay, here's a guy that just talks about these companies so that he can get paid, and then once it's done, he moves on to the next thing. So it's very different. And I think that's what I meant by underappreciated, because no, offering that service is typically, this service is offered by, um, managed accounts. So what I mean by that is, typically what you see, this is something that, a broker, um, would come and say, look, to their clients in Canada, would say, look, I think this is a good opportunity, blah, blah, blah. And most of the time, I can guarantee you that brokers don't do the amount of legwork that you do. They do speak with management, but because everyone has only that many hours in the day, they're not gonna keep, um, you know management feet to the fire, essentially, and keep asking and checking on them, and at the same time, they can't actually go and help them. So, today you mentioned an example. Today you were talking about, an opportunity for MCE members, where they can come in and invest in this company prior to its Reg A. And whether they go public at 5, or their next raise is at 5 or 10, or it doesn't really matter. You're getting an opportunity that, for average people, they're not going to be able to access. And number two is, you've done the heavy lift, and more so, you've negotiated a fantastic deal. So I think it's a win-win for members of MCE. And again, as a member of MCE, I find it to be very fruitful. And you've done that with Aduro this year. You've done that with Boxer recently. Exostem, now Exostem, again. So this access to capital, and providing, so from a company standpoint, it's a very good, um, getaway to finally speaking with someone that actually cares about the fundamentals of the company, not someone that's just trying to buy the stock to serve it back in 4 months in one day. And from a member standpoint, they're getting good terms, lucrative terms, especially now when the market is, you know, in a state where they hate everything called microcaps. So that's what I meant by underappreciated, because everyone's out there saying Mariusz is not good. He just pumps and dumps, whatever. But they're not looking at the what goes beyond it. Like, I mean, did Mariusz go and sell all his positions and while it went up? Like, he, did he foresee a interest rates going from 0 to 5.5%? No. So, and that's why I think again, this market unfortunately takes people from a hero to a zero and back to a hero quickly because you're as good as your last win. So that's in summary why I think you are underappreciated.
Yeah, thank you for that. You also talked about, I think you met with some bankers, and they were talking about how difficult it is to raise money in this market,
Yeah,
and how valuable it is for any company that's on MCE, for example, to have access to us.
yeah. So I was talking to bankers about and in the US, and they were telling me that it is great that being able to raise you know $1 to $3 million in a span of a month. They were saying like it used to take us 2 3 days to raise $10 million. Now it takes 4 to 5 weeks to raise that. 4 to 5 million bucks on even for some junior Nasdaq companies, and just a representation of liquidity, right? Um, so I think that again it goes back to why you have a kind of a good negotiation position with companies is because you're able to go and tell them, um, MCE can get you 1 2 3 million bucks um, in your treasury during this kind of tougher time, but they're not going to do it at the normal terms like Berkshire recently. 20 and 20 is a fantastic financing. Um, like you're literally getting, a call option for 5 years at 20 cents. Try to go and buy a call option on any stock on your NASDAQ for 5 years. What is it worth? In my opinion, the 20-cent warrant that Berkshire has is worth at least 6 7 cents if you believe in the company. And again, I cannot here try to convince people because I went into the race, so I am not trying to convince anyone. I'm just saying, like,
But it's
if you
an
understand.
interesting point. It's an interesting point that you're making, because Gary was facing a difficult situation because the auditor quit for none of his fault, right? The auditor got fined. And then this was during the time that he was short on cash,
Yeah,
right? In a market that is so difficult to raise cash. And so far, up to now, whatever money was raised, most of it came from MCE right now. There's going to be
yeah,
more, but like whatever was raised up to now came from MCE. So it's kind of like we solved a major problem. $4 million within 4 weeks. That is very valuable to him, to his company, to have MC and me around. And now this other company that you mentioned, that I just said that we're going to do a private placement, for $1 and one full warrant, they are at the cusp of something huge. And I just got on the phone with them and I'm like, why are you raising money? And he's like, because I can see the market turning. We're going to be $1 billion company in 2024, I don't want to slow down. Like, I need to start this study so that by the time I am done with Reg A, I am already 10 days into this study. I don't want to delay everything. That's why I'm doing this. And they're coming to me because they know I can get it done fast. And within 2 hours of me sending an email, I already have 250,000 committed out of 1 million in 2 hours.
And that goes back to what I said. Like, first of all, what you had offered, like as someone that's in that deal, okay, and like it takes some more here. I put money in the first, second, and now probably the third. Over time, there are data points, and you probably remember or not, but my check size in that deal has increased um, from the first to the second, and probably going to be higher in the third. Why? Because they're saying this is what we're going to do. You get the ability to see whether they're achieving what they're going to do or not. If they don't, then you're like, okay, well, I won't cut another check. It's good. But if they do, then it's great. You're now de-risked as an investor, um, and you're getting it at the same terms. So yeah, I think it gives them a lot of latitude, but again, it gives a lot of latitude for your investors for MCE. So you know, again, I think this is gonna come to pass, and to make it short, I think you're gonna when the market turns, as I said, you've turned from a hero to a zero, and now this is gonna turn around, and you're gonna become a hero again. So the reality is that no one's responsible for how they buy and sell and so on. So it's something that they have to take care of. Um, but I think there's so much opportunity with the names that are out there, and these names will make a dent in one's life. And that's kind of the summary of what I'm saying.
Yeah, I agree with you. There's opportunity after opportunity after opportunity, and those that have the courage and money to load up during these times, and when they have the opportunity to load up and get a warrant, a full warrant at the same price as the private placement. I mean, that 5 years, for example. I mean, oh my God, that's going to supercharge the returns like nobody has seen before.
Absolutely, I fully agree.
Yeah. All right, cool. Well, thanks for chatting with me, telling me why you like microcap stocks.
Awesome. Thank you so much. Thanks for having me.